The dollar bull momentum has gone. Have we entered a new era of dollar downside? We're going to break down all the key macros and technicals. Guys, Ken Chigbo back with another markets update. Let's jump straight into this. Hey, baby. Happy Sunday. I hope we're all well and truly lit. Yes, we're back. We're back with another week in these beautiful markets. Guys, let's jump straight into this rundown. Um, Look, last week it was another week of selling pressure for the dollar. So that marks two consecutive. But really, obviously, we've been on a decline for the past sort of 5 weeks now after topping out up here mid-January. Now, in terms of the further downside pressure, let's just talk about this from top down. Okay, so starting off with the top, remember, all of this upside pressure come sort of commence of October, all this upside pressure here for the dollar was in anticipation of Trump. Obviously, Trump, it was a Trump trade. Okay. Markets expecting Trump to win the United States presidential elections. So we had buying of dollar in anticipation of Trump coming into play, right? Because of these potential tariffs that he's going to implement, the tax cuts, deregulation, just his policies in general were seen as pro-growth and inflationary, okay, which is bullish, of course, for the dollar because it means the FOMC. Why? Because the FOMC would have to be more hawkish, as they have been, right? They are currently sort of neutral hawkish. They're not looking to entertain any rate cuts anytime soon. Excuse me, guys. I've had a bit of a cold. Which is why we saw this buying on anticipation. Now, come January, right? So the commence of January, obviously, we still had we had a decent push to the upside early Jan. But then obviously we ended up sort of topping out at that around that psychological 110 area. And we formed what we can view here as a reversal doji. Why? Okay. And why are we seeing selling in February? So let's just tie those two together. Why? It's because it was almost on the fact that, okay, Trump has now come into play as president. We're already buying in, we're already pricing in Trump coming into play and all of his policies. Now we're selling, we're taking some profits off the table, and we're selling on the fact. Okay, so we're taking some of our profits off the table and we're selling on the fact. So we buying. Guys, you see all this information that I'm putting into this video, it just comes like that, right? It's second nature to me. And the reason being is because obviously I have that experience. Nothing beats experience in these markets. Everything that I have learned, I've been able to simplify because a lot of information that's out there in the public domain is extremely overcomplicated and a lot of jargon. And it doesn't make it easy for the everyday person, everyday trader trying to learn macros, understand, why is the price just spiked here because of this fundamental reason? I don't understand it because all this information is over, complicated. But for me, all these years, I've been able to simplify it, make it easy and digestible and actionable for the everyday trader. And that's exactly what I've been able to do. And I've put together in my fundamental bootcamp course, which you can obviously check out if you're willing and keen to really level up your whole game. You can thank me later on that. Anyway, let's continue with the video. Anticipation, we sell on the fact. It's quite a common thing that happens in the markets. Now, one of the key reasons that's really helped the dollar or helped the dollar bears, okay, and seeing some of this correction. It's not so much the fact that it's the dollar bears. It's a case of more of profit taking. All right. It's not to say that the dollar's fucking bearish because it's not bearish. Okay. And we're going to get onto that in a moment. It's just the case that markets are taking profits off the table. Just a bit of a technical thing. Now, why as well is look, markets always fear the worst. And we're going to break everything down in a moment. Just stay with me for a moment. So you're just fully aligned with everything on a macro level and the thinking behind the markets in terms of the narrative that they're running with. Markets always fear the fucking worst, right? So when obviously anticipation of Trump coming into play, markets are fearing, he's going to sit down and he's going to announce tariffs. Obviously he did. He was speaking about tariffs, but he didn't actually implement anything. This is all, as I said to you guys before, this is all to give Trump power and so that people take America seriously. I mean, people take Trump seriously anyway, in the sense of they're scared of him because obviously United States at the end of the day is the biggest economy in the world. They're a dominant force and they could cripple other economies that rely on that business with the United States. Okay. So the fact that he hasn't actually implemented, there's no tariffs. There aren't any fresh tariffs that are in effect. So markets are relieved. They're like, whew. He hasn't actually implemented tariffs. Yes, he's warned. Yes, he announced those Canadian and Mexican ones, but then they've been postponed. Good negotiations have been underway. Where the reciprocal tariffs, again, delayed. So everyone just relieved. They feared the worst. So it's allowed risk appetite to come into play, hence why stocks in the United States remain around record highs, hence why safe havens within recent weeks have come under pressure. Look at yens. After we saw some flows into yens previously because of the BOJ hiking and their hawkish potential hawkishness with their outlook and leaving the door open to more hikes, and it narrows that divergence, right? While other major central banks are cutting, the BOJ are hiking, right? So it's narrowing that divergence, that yield differential that we had before. Anyway, yen to the side, we'll get onto that in a moment. But we saw some weakness in yen because it's safe haven. We saw some general weakness in the CHF and dollar. These are safe havens and riskier currencies. If we're going to break everything down in detail in a moment, but obviously euros had a chance to push to the upside. GBP has a chance to push to the upside. Aussie, every sort of riskier currency. Even look at dollar CAD, right? And dollar CAD is and the economy in the Canadian economy is crippled in comparison to the United States. We're seeing a worsening in the jobs market. We're seeing poor growth. Unemployment's high. Inflation's coming down. There's risks, obviously, still at this tariff. We've had the political instability with Justin Trudeau step down. It's so much, and the Bank of Canada are extremely dovish in comparison to the US economy, which is fucking strong. But look at CAD. Look at CAD's performance versus dollar. So this is what I mean. Risk appetite has come into play. All right. So what does this mean now for the dollar? Well, if we speak technically for the moment, we're at a very, very key area for the Dixie, all right? We're retesting this 106.50. Why is this significant? Let me just sort of tie this up a moment. Why is this 106.50 area significant? Well, because it had capped upside for a while. Look, when we fell through and fell in this awful mundane range for a couple of years, capped, big rejection, capped, rejection, selling. And then finally we broke through and now we've got a retest. So hold your horses a minute, dollar bears. Hold your fucking horses. Because now we've got a very, very significant retest underway. Is the dollar bull rally really over? I'm not sure. I don't think so. Okay. So at the end of the day, we always trade what we see. I said this before, right? I always have a strong view. Okay. And obviously at the end of the day, where I'm a man, so there's always a bit of ego there, logical ego, right? In terms of my view on the markets, where I expect it to go. But obviously, I still have to trade what I'm seeing, right? I have to put my ego and my view aside and trade what we see, just understand it, understand that macro narrative. That's why I always say finger on the pulse, because we always have to be agile and move with what narratives the markets want to run with. As long as we understand them and know how to capitalize them, we're blessed. It's all good. Who gives a shit? So I think this is a key area, right, for the dollar index. And I believe at some point, guys, remember those weeks ago, I called that dollar bounce here. Where was it? Here. No, sorry. Sorry, it's here. Okay. And obviously that pushed to the upside, which we're anticipating to go and challenge 110. All right. Obviously, we then lost momentum. Fine. Now I'm calling that February. Okay, will be the end of selling. And March, we end up doing this. All right, let me make that clearer. Okay. What's that? Reversal doji. I think we're going to get that in March. Okay, reversal doji, and then we'll resume business. Why? Okay, guys, I know sort of I'm taking a long way around, but I just want you to understand everything before we look at everything in further detail technically. I'm just sort of sticking to the dollar at the moment because it's very, very important. It's driving market moves. Obviously, right now, like we have lower time frame, as I always say, there's always noise on the 1 minute, 5 minute. When you look on the bigger time frame, you get a real understanding for things, and there's those bigger drivers where the trend's going. It's just the same thing on a macro level. When you look at fundamentals, we have all this interim news, all this interim sentiment. But then when you zoom out and view things from a holistic view, there's bigger macro. So right now, the noise is obviously we've got risk appetite because markets are like relieved, no tariffs. There's risk appetite in the markets. Okay. But then we've got the bigger view, macro view, which is the US economy is still fucking strong. Why the hell would we see outflows from the fucking United States and going elsewhere? Okay, yes, there may be some good value stocks in Europe and good value stocks here, there, and everywhere, but these here, there, and everywhere are higher risk in comparison to the United States, where you can earn a decent yield and it's a stable economy. It's the world's, it's the reserve currency of the world. It's the largest economy in the world, and it's more stability there. Okay, so I think at some point that narrative, that thinking, you can't deny those macros, and we'll see that that flow coming back into play for the dollar. Okay, especially if things do get worse on a level of trade wars, then expect this to resume business as per normal. Or just markets just focusing anyway on those broader macros. Now, when we look at this week, it isn't so much about dollar. Okay, I'm just going to pull up the dollar quickly here before we look at all the dollar pairs. Okay, so wrong week. This week. So we're going to keep an eye on Trump. Obviously, he's going to speak about tariffs and all that, these usual threats. So we'll keep an eye on there. Some volatility expected for sure around it here, especially given the reciprocal tariff situation and all this, that, and the other. So we'll get a view and an update from him there. FOMC meeting minutes, we know they're hawkish. It's going to be a non-event, non-mover. Okay, the FOMC actual rate decisions are moving, but not the meeting minutes. Unemployment claims, we've seen unemployment claims remain steady in the United States. The labor market's solid. We saw that at the previous non-farm payrolls reading. Look at the non-farm payrolls. Okay. Unemployment rates are low, 4%. Yes, a decent amount of jobs being added still. Okay, slightly less than expectation, but the previous revised higher, 307. Wages, high, 0.5%. Okay, so still very much bullish when you look at the labor market. So, I expect that still to be reflected in these latest weekly claims. Look, last week's less claims, 213,000. This week expected only 214,000. So still bullish there, and I don't expect any downside surprises. Manufacturing expect to remain steady, and services, which, there's some room for surprise to the upside, given the economy is still moving quite well. So I still think things are supported for the dollar on a macro level, but right now, risk appetite has been driving the market. So as I say, I think we'll start to bottom out towards the end of this month. Okay. I'm saying anywhere where we're at now, from now until March, we'll start to see the bottom of this move, and then we'll push to the upside, have a big push to the upside, potentially towards the back end of March, and definitely April will be liftoff. I say definitely, but it's just my opinion. Okay, so that's the dollar. Let's start taking a look at things in a little bit more detail with Euro, GP, so on and so forth. Give me one moment. Guys, as I always say with these videos, I hope you found some value here. This is just a snippet, a scratching of the surface of the value that I push out on a daily basis via the TFTC premium community, which you can check out, okay, if you wish. And I also have, obviously, an in-depth, seriously, hours, okay, taking you from start to finish of how to actually trade and implement macroeconomics fundamentals. You will not find education out there like this that simplifies it, makes it easy, makes it actionable, gives you real examples throughout the course, okay, of how to implement that with the technicals, along with strategies as well. Guys, do you know what? Because I'm super pumped and we've got off to a great start to the year of 2025, I don't think I've ever run a discount. So here's a little small discount, 10% in the description if you wish to leverage it. Otherwise, keep soaking up these videos when I do produce them and when I do drop value. Stay lit, stay blessed. Let's get it.